When do I sell my stocks? That's been a pretty popular question on our Telegram group. And yeah, today I'm here to address this question because I think we all can agree that there's a lot of coverage about when to buy, how to find undervalued stock, how to study the fundamentals, how to see what's the company doing, and then ultimately make your bet. I think these days people are getting pretty good at buying stocks, right? So then the question is, you keep buying land, and when do you sell it? So that's not really talked about, and I think everybody have their own ways, much like buying. So everybody has their own matrices as to when to sell. So today I'm going to do some coverage about when I sell my stocks. Welcome back. Hey guys, so I'm sure you've heard our chat with Randall from Books Beyond Borders. If you have yet to, check out episode 65. I'm here to announce our next giveaway. They have agreed to give 5 lucky winners one book of their fancy on the portal, island-wide delivery, absolutely free. So simply follow us on our Instagram, The Financial Coconut, repost our cute little coconut giveaway post on your story, and we will choose 5 of you guys. Brownie points to whoever that writes some nice stuff about us. So yeah, I'm looking forward to hearing from you guys. Keep reading, keep learning. Check out our Instagram page at The Financial Coconut for more information. See ya soon! So good morning everyone, I welcome you to another day with The Financial Coconut. In our podcast, we'll be debunking financial myths, discovering best financial practices, and discussing financial strategies that fits our unique life. You get it. Ultimately empowering us to create a life we love while managing our finances well. And today, we're back on my pet topic, stock picking. Not saying I'm a pro, but you get it. I've been doing this for a long time and quite an enthusiast. So if you have not joined our community Telegram subgroup, TFC Stock Geek Out, definitely join it. It's gonna be fun. Learn a lot of stuff. And specifically for today, we're going to talk about when do I sell my stocks. Of course, this is not a recommendation, not trying to tell you this is like a mantra you have to follow. No, I'm just going to share with you my perspectives, how do I do it, and you can ultimately make your own decision. But before that, I just want you to know that the year is coming to an end, and I appreciate that you've been with us for this one whole year and more. Right, so TFC has grown a lot, really nice, and I think a lot of us are volunteers here, so we are all trying to make this work. I'm sure you guys are trying to help us make things work too, so definitely, like, share, subscribe, chill your friends to listen to this thing. I hope it benefits more people. And yes, back to my favorite topic, my pet topic of stock picking. I've been doing this for a while, and even the post producers say, hey, when you do stock picking content, it's very easy to edit because there's no RE or la because it's just something that I've been doing for a while and I do like it. I think a lot of these things that I'm share with you over time has been internalized by me already. So it's not something that I have to create, or have to do a lot of research because I've been doing a lot of these things. And I know you guys have this question, right? It's like, when do I sell my stocks? When do I sell my stocks? When do I sell my stocks? Right? That's always a very big problem. And I'm going to start out by establishing some fundamental principles and kind of debunking some of these other strategies that people do, right? Which I don't use them, and I give you my reason why. But before that, okay, let me just establish what kind of investor I am, right? So I'm a long-term growth investor. Essentially, I look for long-term companies that I can hold for a very, very long time and for them to compound and grow and for the stock price to reflect, as it goes along, and I make my capital gains over time. So I have a very long horizon ahead, like 10 years, 20 years, right? That is kind of how I see investing. Right. So with that backdrop, I'm going to share with you some thoughts. Right. One of the main thoughts is this whole idea of value investing. There is this perspective that you can find intrinsic value, and then there's an undervalue, and then there's an overvalue, kind of margins, right? So every time when it's below its intrinsic value, then that is undervalue, and you should buy it. Every time it's above its intrinsic value, and you should sell it, right? And to me, I question that understanding lah. Not saying that it is wrong. I'm sure there are a lot of people that practice this way of investing, and that is them, but I don't use it because, let me share with you my perspective. Number one is because it is very difficult to determine intrinsic value, okay? A lot of people use the DCF model, discounted cash flow. I'm not here to going to explain more. If you are already in this, you understand. If not, you can Google what is DCF. This is a lot to explain. And in DCF, there are certain assumptions, right? Terminal growth rate and growth rate, right? So growth rate is something that is is very interesting. Under normal situations, right, you realize that there is no consistent growth rates. Growth rates are ever changing. So people are taking medians, right? People are taking averages when it comes to growth rates, because certain companies can be doing something for a really long time, like maybe they've been doing health food for a really long time, and then suddenly there's like a huge health trend, and then whatever they're selling, boom, 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 just flies, or they have been doing like this whole e-commerce software kind of thing, and then during COVID, suddenly all their numbers fly, right? And you don't know what is going to happen to the growth rate after this situation. Will the growth rate continue, or what is going to happen? And big companies also tend to do a lot of mergers, like they will buy other companies that either are competition or other verticals, and see how they can continue to generate growth rate. So all those things, right, will fundamentally affect the accuracy of growth rate as a factor in discounted cash flow. And so to translate to human language, it just means that it is very difficult to determine how fast the company will grow and how consistent will they keep growing, or will they one day just stop growing. And so from that perspective, as a long-term growth investor, I'm not extremely reliant on this idea of calculating an intrinsic value, right? And also, one thing I want you to know is that I tend not to buy below quote unquote intrinsic value. I do use a calculator, and then I tend not to buy below it. A lot of people will be like, oh, you need to have 20% margin of safety, you must buy below it. Right, but I don't, because my perspective is good companies tend not to be cheaper, right? Good companies tend to have a premium, and that's the inevitability lah. And it tends to be the case. It's very tough, very, very tough to find companies, especially in this market, that are like below quote unquote intrinsic value. So because I don't believe in this idea of intrinsic value, like below value, then I also don't really sell quote unquote above value, right? Because to me, this whole thing is just a bit questionable. I don't really use them, right? And so that's my perspective. And also another thing you should know is that I think a lot of people don't understand that big companies can go bigger and high stock prices can continue to go higher. A lot of people feel like what goes up must come down, what goes up must come down. That sounds very logical, but in the stock market, right, it may not always be the case. What go down can continue to go down, what go up can continue to go up. So as a long-term investor, I want to hold it for the long. I want to see companies that can keep growing and keep growing and keep growing, and eventually their share price will reflect. So with all these basic understanding of like how I don't exactly believe in the idea of DCF intrinsic value, how I understand the stock market as, good companies can keep growing and the stock price can keep going up, and I'm a long-term growth investor. Now I'm going to share with you when do I actually sell my stocks. Okay, so the very, very first situation, where I will sell my stocks is that when I have a better place to go, I will sell it. Okay, so why do I say so? Let me give you a better understanding. So I see things from a capital deployment kind of way, which actually is what a lot of long-term investors, especially a lot of fund managers, that's what they do. They deploy capital. They have, let's say, $1 million, and then they'll be like, okay, so what do I want to buy? This, and what's my thesis? And then I'll buy them and I'll wait and see how things goes, right? So that's kind of how it is. But when it comes to the retail investors, right, that means people like you and I, a lot of people, right, they have 50,000, they have 100,000, and when they invest in the stock market, right, they are more concerned about making the most profit, right? So that means like if the stock they buy like UOB, I don't know, they buy DBS or whatever, okay, a few dollars, they buy it, and then suddenly, go up by 5%, say, hey, must sell already, I make money, already, later the stock come down, right? So that is, it is, if they are like traders, or I think they're gamblers, but if let's say they're traders, then so be it. But if you call yourself a long-term investor, then why are you selling because prices are going up? Then what is your understanding of long-term growth investing or even long-term value investing, right? So if you understand the idea of long-term, then your thesis to me, for selling should not be because prices are going up, right? And because that is the expectation, fundamentally prices should go up if you are buying good companies. So instead of thinking of making the most, which is the kind of, a lot of people have this idea, I see it from buying the best that I can understand, which is the capital deployment way of looking at things. And I hope that you can see it this way, which is to look at things, you have this 50,000, you have this 100,000 capital, you want to buy the best of what you can understand, right? So this is how I invest and this is how I see it. Okay, on top of all the, like all the studying the financial, studying management, all the fundamental analysis, all those I've done it. After I do all those, then how I deploy my capital is this way of seeing things, which is buying the best that I can understand. So when I sell it, it must also mean that I have something else better to go to. How I do it is usually my portfolio has a max of 20 companies at any one time. Any more, I'll be a bit luan already. Huh? Too many things to follow. Think about it, right? If 20 companies, every quarter they release, their investor report. Every annually they will release their financials. Dude, the amount of work just to go into looking at all these things are nuts, right? And I'm not full time. So I'm not going to go crazy and buy 40, 50, 60 companies, right? So I buy 20 companies that I believe in, right? And when I look at it from that angle, how I sell it is a bit like a Royal Rumble. Right, yeah, I'm sure all WWE fans are Royal Rumble. Essentially, if I want a company to come into my portfolio, if someone tell me about this company that I thought pretty interesting, let me go and study it and understand if it fits my investment palette. Then, if I think that this company is potential, okay, I will take it into my consideration and look at all these companies that I already have, all these different stocks that I already have, and ask myself which one I can sell. Right, so if I sell this to put into the new company that I want to go into, that is when I sell it because I have a better place to go. Not because, hey, go up already, must make money, must take it out. Right? Because what goes up can go higher. Okay. If you are a long-term growth investor, you want to see long-term and not just because prices are going up. So that is number one situation when I sell. It must be I have a better place to go. And I must understand this place. Yeah. Not just because someone tell me it's good, then I'll go already. Right. So people share ideas, they exchange thoughts, and that is great. But you must have your own fundamentals as to why you buy this company. So, and in any case, if I have a better place to buy, I will go. So that is when I will sell. Number one situation. Okay. Number two reason when I sell my stocks is when the story of that company has changed. Right. And I'll come back to you after a word from our sponsor. Hey guys, so yes, I get it. Everyone wants to learn to invest and somehow believe they can be a Warren Buffett. Truth is that will probably never happen, but if we just want to become slightly better investor, making consistent 5 to 10% returns, then Dividend Machine may be something to consider. Dividend Machine is a program by the fifth person, our selected course partner, which focuses on helping you pick dividend-paying stocks to grow a consistent investment income, or some call passive income. On top of that, with us around, you can come back and discuss and idea with our community. So yes, for more details, check out thefinancialcoconut.com/dividend. Everything is in the link below. Okay, so what do I mean by I only sell my companies when the story has changed? So every time I invest in a company, I need to believe in what they're trying to do, right? So I'm a long-term growth investor. I look at their fundamentals, right? So if, let's say, okay, I own Facebook, right? I own Facebook on this idea that they will continue to grow their ecosystem. More and more people will be on Facebook, and then they can continue to sell ads and, keep incorporating this whole business effectiveness into their whole like ad ecosystem, right? So more and more businesses will be using advertisement on Facebook, and more people will be using Facebook. So that is their growth story. Of course, they have like Instagram, WhatsApp, Oculus, all those kind of additional stuff. I know, okay, but simply put, that's the idea. More and more people partake in the Facebook ecosystem, and more business want to advertise to this ecosystem. And recently, there have been a lot of backlash, from Congress and from people in general that are very unhappy that Facebook is dominating the space. Of course, not just Facebook, Amazon, Google, Apple, all getting whacked, all the big tech, right? So if Facebook ends up getting some sort of antitrust lawsuit and have to break up, right? That means Instagram has to go solo, WhatsApp have to separate from Facebook, then the story has kind of changed. Right. So then in that case, I'll be questioning, should I still continue to own Facebook? But that is my analysis for myself. Next time I can share with you more. I have not finished analyzing the situation because it has not actually happened, right? So currently the story is still intact. But if Facebook is forced to sell off Instagram, is forced to separate all these different companies and break up their ecosystem, then hey, does Facebook still have that same original value? I don't know, but has the original story changed? It has changed, because when I invested in it, this was the reason, but now it's a different scenario. So the story has changed, and I may sell my Facebook shares if that happens. So another company that I own is JD.com, Jingdong. It's a Chinese company listed in the US, of course, also listed in Hong Kong. And yeah, fundamentally, they are just doing e-commerce. It's a bit like a Shopee, a bit like a Lazada, right? So they're doing e-commerce, but they're way bigger, of course. And the growth story is that, they will continue to expand their user acquisition. They'll continue to refine their whole back-end logistics ecosystem so that more and more companies will want to use them when they are thinking of setting up online shops and also get a bigger reach and more audience, more transaction on their platform. All right. So more transaction, more, ecosystem partners, more merchants want to come on, and then they can charge all these additional fees for logistics and whatnot for all these other merchants. Have you ever wondered why Taobao, JD, and all these Lazada, Shopee, they don't really charge you much fees, from the start? They don't charge you because they charge the merchants, right? The merchants pay for fulfillment costs. The merchants pay to use their logistics platform. Because if you think about it, Singapore is very small, a lot easier, right? But in China, state to state, it's huge. Billions of people, like a billion point five, I think 1.5 billion people at this point in time. Come on, man. If you are a company and you're trying to sell something and you need to fulfill all these orders all around, how are you going to do that, right? So that's why JD gives you the solution. Of course, Alibaba also does that, right? So when I see their growth story, as long as they continue to drive more and more, gross merchant volume. Okay, so as long as more and more people, speak human, okay, more and more people are buying on their platform, more and more users are on their platform, they can continue to get more and more companies to come on and continue to sell and use their ecosystem, then the growth story is intact. But in any case, if something happened, if their competitors like Pinduoduo is coming up and like just challenging, their original front, then all that things have changed, right? But as of now, it's fine. Everything seems okay. And so if you understand that I only sell my stocks when the narrative have changed, that means their stories have changed, then let me just give you some breakdown as to what are some of the factors that usually occur, usually you see, right? So there are factors beyond the company and factors within the company. Factors beyond the company will be things like if some big tech is entering the space, like how Apple, Google has announced to enter gaming, right? Then all the gaming stocks like Activision, EA, then, goes a little nuts, like a little crazy. You don't know what's going to happen because these big guys are coming in, like Amazon coming into the whole grocery business. And yeah, you get an idea when big guys enter your space, then, hey, crazy, man, can we still strive? Can we still continue to push, right? So there's this whole thing of the Amazon effect. So everyone is worried about big tech coming into their sector. So that is something that you should know. That's something that I look out for. Another point is, what if competition is pulling way ahead? That means when you first start, like the whole marijuana business, right? So many players when they first came on, right, marijuana, right, all these weed providers, and then over time, in a very short 1 or 2 years period, you see a few big boys pulling away from their competition, like Canopy Growth, like Aurora, right? So they become the leaders in the pack, and then everyone else is out already, right? So when you start to see that the company that you may have bet before is, losing the run because it is a whole fast growth pace, then you may want to kind of revisit because the competition is way ahead already, right? Or if there is a change in market realities, let's say consumer preferences are changing or government plans are changing, like this whole government lockdown, then now you cannot do retail, you have to go online. So that is a huge change in terms of factors beyond the company, right? Or let's say the consumers are all eating healthy and people are all going vegetarian, all going vegan. And then, if you own Tyson Foods, if you own like some of those big producers, then you have to question what is the long-term reality for these companies, because the factors beyond the companies have changed. Also, factors within the companies looks like M&A plans. That means if they buy other companies, or if they have a certain business expansion that I don't agree with, or let's say there's a management change that I don't like, then yeah, all these are good reasons for me to sell the company because the story has changed. Which brings me to my third and last point, and that is when I need money lah. When I need money for my life, that is when I will encash and essentially get some sort of capital out. And that is the cold hard truth when you are a retail investor. Okay, let me just give me some airtime. Okay, don't turn off. So when you are an institutional investor, that means you are a professional fund manager and you do all those things, right? You don't really need to care about your personal expenses, right? Because all these people, they give you the capital, you do what you need to do, right? And you can play very, very long term. You can look at things very, very far, or you can do a lot of trading, depending on what is your investment thesis, how you guys do it, and how you sell to your investors. But when I am a retail investor, I need to care about how my money and it's affecting my life in actuality. So if my life has some situation, like my friend recently got married, right? And when you get married, right, you need a lot of money, and you sell down your portfolio so that you can then encash the money to put into your marriage, if let's say that is how you want to do it, right? So I only really encash my money when I have something better to do with it lah, right? So in this case, if my life requires me to take out the cash, whether is it family issues, whether is it like new business opportunity that's out of the market, or whether is it like I got some things I need to pay for, then I will encash the money, which usually doesn't really happen. So for lack of better way to put it, I don't usually sell my stocks. I'm a net buyer, and a bit like a Buffett. So Buffett is a net buyer of stocks over time. So I'm gonna sum up these 3 points, right? Last point sounds a bit stupid, but it's very realistic, right? Because you are not institutional investors. We are retail investors. We need to care about our situation. If we need money, then we sell, right? If we don't need money, then it's okay. We can hold for a little longer as long as the story is intact. So to sum up, when do I sell my stocks? Number one is when I have a better place to go for the money, right? So I have a certain capital, see it as a capital deployment. I'm not always about making the most. I'm about buying the best that I can understand, right? So if let's say there's a better company coming in and I want to get that, then I'll sell out whatever I have to then buy this new better company, right? Number two is when the story has changed, and the story has changed for 101 reasons, whether it's factors beyond the company or factors within the company. If whatever I buy into, there's original thesis, and this story is no longer the same, then okay, I will sell out the company and buy into something else that I believe is better. Number three is when I need money lah, right? So if I need money for my life, then I will sell my stock portfolio. Essentially, that is the reality as to how I do it. Okay, don't give me 1-star review. Anyway, yeah, I hope you learned something useful today. See ya. Hey, I hope you learned something useful today and truly appreciate that you took time off to better your life with the financial coconut. Knowledge is that much more powerful than interesting when shared, debated, and discussed. I hope you would share what you've gained with people you love, and I want to hear from you. Give me some questions and help me along with building a community of financially savvy coconuts. I hope together we can fulfill our curious minds and our desire for clarity. Join our community Telegram group, reach out to us on Facebook, Instagram, sign up for our weekly newsletter. Everything is in the description below. If you enjoy the podcast and if you want to keep us growing and stay independent, do buy us coffee at ko-fi.com. With that, have a great day ahead. Stay tuned next week, and always remember, personal finance can be chill, clear, and sustainable for all. Test. Okay, yep. So that's it. How do I sell my stocks? I know you guys always DM me on Telegram. It's like, hey, is this a good time to sell? Hey, is this a good price to go? Okay, now you got to answer. Okay, clearly I'm a net buyer. Right? I don't really sell based on price movements. I want to know that the company fits my bill for the long term. And yep, I've shared with you exactly how I do it. But don't be worried to keep the questions coming, right? So I'm still very happy to talk to you guys, or even as a reminder, it's like, okay, this is how I do it. But hey, keep the questions coming. And for next week, right? Next week, we're gonna talk a little bit about how to start a business, right? Because I think a lot of you guys are trying to start your own business or your own side hustle, and different businesses require a different way of running. Whether if we're running a fast growth startup, then we need to talk about certain things, founders agreement, all the way to share distribution, investment time frame, and then when to exit, blah blah blah, those kind of stuff. But I think a lot of people just want to do a small little side business, potentially make enough money to then hop onto it, right? So if you don't really have a lot of budget and you don't really want to commit a lot, I think there is a way to do this kind of business, right? Small budget, small business. And yeah, I'm going to share with you how I believe it is done. I think there are a lot of misconceptions out there, a lot of things that new entrepreneurs they end up focusing on, and I'm like, dude, don't focus on these things. They ain't no make sense, right? So as someone that has tried a few businesses and essentially built a pretty successful podcast here and running a decently strong company, I have some thoughts, and I hope you learned something useful next week. How to start a business with limited budget. Okay, limited does not mean no budget, huh? Okay, you still need money to do business, but yeah, see you next week. Bye.